So one of the reasons we invest in a certain asset or instrument is to earn some income or get some capital gains. So in the last quarter of 2023, I put some money into various crypto protocols hoping to earn some yields and generate some income so that my money doesn't fade away with inflation.
I'm fading away!
And after a month of experimenting and letting the platform do its magic, here are 3 platforms that you can take a look at if you want to increase some passive income with crypto. So for the following platforms, if you are looking to use them, will require you to have some knowledge in the DeFi space and also sign up for centralized exchanges. So I'll try to cover how to get started with these platforms, from doing on-ramp into the platforms and off-ramp to take your profits. So the first platform is the easiest to get started with and is probably the most crucial one because you need this centralized exchange to get started with the rest. So I've been using Coinbase for a while now and I've been trying out their earn functions, which is pretty hands-off in my opinion. So hands-off means that you don't need to do anything and it just manages itself. So on Coinbase, there's quite a few earn functions that you can choose from. And even if you're just a beginner or an intermediate user, the UI of Coinbase should be pretty easy to navigate around. And to get started, you can sign up with the link in the description down below. So once you sign up and finish a KYC with Coinbase, you can basically fund your account with Pay Now by saving the QR code and then using your bank app to scan QR and to pay. And after your money is deposited into the platform, we have a few options here on the earn page. There's USDC, there's ETH, there's DOT, there's Cosmo, and so much more. So depending on the yield that you want and what you're comfortable holding, it depends on what you want to swap your SGD for. So for me, primarily I'm staking USDC, ETH, and Solana. And USDC right now, as of recording, pays a 5% APY, ETH pays about 2.9%, and Solana gives around 5% as well. So if you're into staking these tokens as well, you'll be paid in the respective tokens. So USDC gives you USDC, ETH gives you ETH, and Solana gives you Solana. So the APYs will also change depending on the validators because it's a proof of stake. So I used to receive roughly 3 to 3.5% for ETH, but now it's down to 2.89%, which is something you want to be aware of. And converting your Sing dollars to different cryptocurrency is pretty simple. All we have to do is to click on the buy icon, select the crypto that we want to purchase, and in my case, I'll be adding more USDC, and then I click how much USDC I want to purchase. So once the order goes through, your USDC will automatically be staked. So for USDC rewards, they are distributed on a monthly basis, so you can look to receive your USDC on the 5th to the 10th of the month. However, if you're looking to do it with ETH or Solana, this will differ a little bit. So once you get your ETH or Solana, we'll go to the earn page, which brings us to all the earns that we have. And then we can click on ETH or Solana depending on what you have, click on stake more, input the amount that we are staking, and it should be done. So staking will take about 7 days and you'll start earning your stakes after every 3 days, which is pretty exciting.
So exciting!
So for both Solana and ETH, there is an unstaking period. So make some calculations if you're looking to move your tokens around the platform, otherwise you'll be stuck in a waiting game. So the next platform we have is BasedApp, which we have covered in a previous video, and it covers how to get started with it, how you can start earning some interest on your USDCE with the compound integration. So Base is a card and wallet service that allows you to convert your crypto into XSGD, and then you can spend it through their Visa card almost anywhere that accepts PayWave, which is kind of like almost every retail shop in Singapore except hawker centers and maybe your favorite typing store. Nonetheless, if you're staking USDCE on BasedApp, you get to earn anywhere between 4 to 12% in APY in USDCE and compound tokens. This comes with a caveat that you need to manually compound your money by converting COM tokens back into USDCE and then depositing it back into the yield vault to compound your money. So lastly, we got Cega.fi. So Cega.fi does exotic derivatives in the DeFi space. So they build exotic option structured products that retail investors like us can generate higher yields with inbuilt protection in the event there's a market downturn. So the question that you probably have right now is, what are exotic options? So options are one of the derivative products that allow us to hedge our positions.
I hedge my bets.
So in most brokerages, they are offered vanilla options, which are very basic financial derivatives. So vanilla option refers to call options, put options, covered calls, and sell puts. So exotic options, on the other hand, are a little bit more complex because they involve multiple vanilla options, which can then add protection in a downside scenario.
I guess I'll protect who needs protecting.
So some examples of exotic options include fixed compound notes, basket options, barrier options, look-back options, and much more. With exotic options, we do have some risk of losing our initial investment capital, but we have less unlimited losses unlike what vanilla options provide. So Cega Finance has 4 main vault products. We have a dual currency strategy, pure option strategy, bonds plus option strategy, and leverage options strategy. Hey guys, editing Jordan here. So as I was editing the video, I realized that there are some changes on Cega. So right now, instead of 4 products, they have 3, which is dual currency. They have fixed coupon notes, which is pure options, and they have fixed coupon notes, which is bonds plus option. So on the platform, there are many different options you can choose from under each of these vaults, and they all vary in APYs, the underlying asset, and the TLV or total value locked. So I've been using USDC Dragon because I'm holding USDC and I want to accumulate ETH and get a good yield of 73.1%, and I don't mind buying some ETH if the price dips more than 5% after the closing time in 27 days. So I'm currently testing a withdrawal so that I can provide some input on how the process is like and what you can expect when using this platform as well. So a month back, I deposited 200 USDC at the beginning of December, and recently the tenor has matured, so this allows me to withdraw my USDC together with some yields. So in the last 27 days, I've earned 4.73 USDC. So this isn't a lot, but it's still some USDC that I can use to purchase for cryptos if I'm looking to enter the market again. So to get started with Cega Finance, you need a decentralized wallet for sure because this is in the DeFi space. And Cega currently supports 3 networks, which is Ethereum, Arbitrum, and Solana. So depending on which network or the chain that you're comfortable with, you can pick and choose what you want to use. So personally, I'm on Arbitrum because I do have some other DeFi stuff that is on other protocols, and it's much easier for me to deal with things just on one chain instead of having to remember multiple chains. So to on-ramp into Cega Finance, you can use Coinbase and subsequently send your tokens from your Coinbase into your Coinbase wallet. So if you don't have a Coinbase wallet, you can easily make one. Otherwise, MetaMask is an option for Arbitrum and Ethereum, and Solflare is an option for Solana. So what you need to do next is to connect your wallet to the Cega platform and then deposit the relevant tokens. So let's look at USDC as an example. So once I click onto the product, it tells me about the strategy and some parameters like the TVL, the underlying asset, the deposit asset, the option type, etc. So there's a few things that you need to take note here, which is the network at the top, the deposit asset, and the settlement asset. So deposit asset refers to the asset that you need to deposit. So in this case, for USDC Dragon, it's USDC on the Arbitrum network. And if you already have USDC in your wallet, it will automatically read the wallet and allow you to deposit your USDC to start earning yields. So the next thing that we can look at is the trade parameters. So here you can see how long your money will be locked in for, and at what time the trading will start. So usually each tenure is about 27 days and it starts on a specific time, which is Thursday 2 PM UTC or 10 PM on Thursday in Singapore time. So if you're looking to participate, you need to make those deposits before the time. Otherwise, it will be scheduled for the next batch, which is the following Thursday at 10 PM. And since with this strategy, there's an auto rollover enabled, this allows you to compound your money without you needing to do anything at all. So with Cega Finance, there's 3 scenarios that can happen once you put your money in or once you put your USDC in. So the first scenario is when Ethereum price stays the same. So with USDC Dragon, I'm willing to buy Ethereum at a 5% discount. So let's say the price of Ethereum at day 1 is $1,890, and the lowest price I'm willing to pay for Ethereum is at $1,890 minus 5%, which is $1,800. So once I make that deposit, at the end of day 27, let's say the price of Ethereum is $1,920, which is above the strike price or the discounted price that I'm willing to buy Ethereum at, nothing happens in this case. I get to keep my yield, plus I get my initial capital back. So my capital plus yield is then automatically rolled over for a new 27-day vault. So the second scenario here is when Ethereum price falls below the discounted price. So let's take the same parameters as an example. So if let's say the price of Ethereum falls below the strike price of $1,800 on day 27, I will then receive Ethereum at the buy price of $1,800, and I'll still receive my 2% yield. But the only difference here is that now my cost price of Ethereum might be higher than the current price of Ethereum, giving me some unrealized losses. So the third and last scenario here is the price of Ethereum falling and then rising up again. So let's take the same parameters as an example. So the discounted price that we're willing to pay for Ethereum is 5% below the strike price, which is $1,800. So on day 1, let's say Ethereum is $1,890, but on day 10 the price of Ethereum falls to $1,700. But from day 10 to day 27, Ethereum rallies and breaks $1,900. So in this situation, we'll get our capital in USDC plus a yield in USDC back because the closing price of Ethereum on day 27 is still higher than the strike price. So this can sound a little bit complicated, but once you kind of read a little bit more, it gets a little bit easier to understand. So once you take profit from Cega and you withdraw your token from Cega, what you can do next is to then send all these back into Coinbase using the Arbitrum network again. So on Coinbase, you can do a few things here. You can either cash it out into your bank, or you can send it through Polygon into the BasedApp where you can spend it at any other shop that you want. So these are the 3 platforms or protocols or projects that I'm using to get some crypto passive income, and I feel that earning some yields in stablecoins do provide some certainty, and it gives me the ability to purchase other tokens that I'm looking at. But one of the downsides of holding stablecoins is that stablecoins do not pump that much, or they don't pump at all, which means that there is zero capital gains if my tokens or my stablecoins do not go into a yield or earn program. So this brings us to the end of the video. I think it's been a pretty long one, but if you're interested to try out all of these platforms, I will leave the links in the description down below where you can check them out. We'll greatly appreciate if you can drop us a like if you haven't, subscribe, stay notified for new content, and if you got any other questions, let me know.